Welcome everyone, and for those of you that have not been here for the Naked Trading webinar, perhaps we might go over a short sort of, hey Boyke, I know you've been around. I could go over a short sort of intro on how I set up my charts. But before we do that, what I would like to do is ask everyone here, if you had the choice tonight, we're going to sort of take a poll and see which way we go with tonight's webinar, or today's webinar, depending on where you are. Obviously, if you're in Europe, it's in the middle of the day. So what I'm asking is this: would you like to look at current charts as they are right now? Would you like to look at money management and projecting profits, or would you like to look at entries and exits and sort of trading simulator, so I can show you sort of how I approach the charts? So A is we'll look at all the current charts I've got here. B is we'll look at money management and projecting profits and losses. And C is we'll look at specific trading entries and exits. Okay, so let's see. Live charts, entries and exits. C. I would take it all. C, A, B, C, A, and C. You only get one vote, Harley. C. Okay. I think we see. It looks like entries and exits are gonna run away with it. I believe that's what we're going to get. And then what we'll do after is we'll go back and look at the current. We'll go back and look at the current charts. I think that will work. Yeah. All right. All right. What we'll do first then is we'll look at entries and exits, and then we'll go back and look at the current charts and see where that takes us then, if that's all right with everyone. Excellent. Okay. So let's get rolling. What we're gonna let me show you how I approach the markets. Basically, what I do is I'm going to set up a chart here, and what we have here is a Euro daily chart, and this is just basically how I set up my chart. So I'll go, if I'm trading the daily chart, I'll move to the weekly chart, and I'll draw in some support and resistance zones on my chart. And what I'm looking for are those places on the chart where price has touched both sides of the line. So I'm going to draw lines here that have touches on both sides. So in other words, the market's moved up to that line, and it's touched it as support, and it's also found it as resistance. Okay, so Manoj says his 5-year-old son told him a joke yesterday. How do you tell if a pen is alive? You tickle him with some poetry. All right, Manoj. I'd say for a first joke, that's a pretty good effort. I'd have to say that's pretty darn good for his first joke. Are you sure it's his first joke? So I'm just drawing some zones in here on the weekly chart and on the Euro here, and these are touches from above and below. If I ever get sort of confused about a zone, Manoj says, yep, that's his first joke. What I'll do is I will move to the line chart, and the line chart will help me identify these zones a little bit better. And basically what I'm looking for are those bends in the line, okay? And I want to see touches on both sides of the line. So you can see here from this chart, it's telling us that the Euro has most recently bounced off the 1.2895 zone, or essentially 1.29. We could round it up 5 pips, why not? And that's our most recent bounce, or where the market has most recently found support and then it has broken through the 1.3393 zone, which is essentially the 1.34, isn't it? So this is how I'll set up my charts. In the beginning, I'll go to one time frame higher, which is the weekly. Then I'll drop down to the daily, which is sort of my normal chart, and I will draw in some more lines based on this chart. So these are going to be daily zones based on where we see touches on this daily chart. And I'm going to wait for the market to move and hit these two spots, these zones that are red, which are my daily ones, and the ones that are blue, which are my weekly ones. So, and again, the best way to look at this is that I'm looking for those spots on the chart where we've seen support and resistance. Okay, we probably have a few more here, but now when price makes it to one of these zones, and again I call them zones and they're not really lines, they're more zones because they're a little bit squishy, and we'll see price sometimes push into these zones a bit before it finally is pushed away. So it's not, I don't immediately expect price to be turned away as soon as it makes its way into a zone. But sometimes it will push into it a bit. All right. Okay, so there we are. We've got everything set up here on our chart. Now what I want to point out is this bar right here. This is a bearish, what I call a bearish big shadow. And it's some of you might call it an engulfing bar. It's this bearish bar here, this candle right here, right on the 1.3795 zone, which is essentially our 1.38 zone. So this is a touch on this zone, and the reason why it's a valid sell signal is because this bar right here completely engulfs the prior bar. It's a big shadow. It overtakes it. It has a higher high, it has a lower low. It also closes lower, so it's a bearish bar. So every time price approaches one of my zones on the chart, I don't take a trade. I only wait for those situations when we have a clear reason to take a trade. So in other words, we need two things. We need one, price to approach the zone, and then two, we need to see a specific pattern that's reliable and that sort of hints what's most likely to happen. And in this instance, what we see is after price made it all the way up to 1.43, it came down to the next zone, which is at 1.4070, this red line here, and it paused. And this day right here closed right around that zone. The next day, it finally fell through that 1.4070 zone, and then one more day later, it came down to the 1.3795 zone, and it paused. It closed there. Then it took a couple more days before it fell further. It made it all the way down to the 1.3527 zone, which is this red line here. And then it pushed through it a little bit. And again, these zones are a bit squishy, right? So it did push through it a little bit, and then it found support there finally, came back up, all the way back up to the 1.3795 zone. Again, if we wanted to make this 1.38, that would be fine too. 5 pips isn't a big deal, particularly when we're looking at the daily chart. So price made it all the way back up to this zone, and then it printed a bearish big shadow. So that's really an ideal setup as I see it. A bearish big shadow on a support and resistance zone right here. And you can see if we look to the left, we can see several times here where price found support here, there, and it found resistance here. As it was coming up here in September and October, it made its way up to the 1.3795 zone and then was repelled, and it fell one day here before it finally made it through a couple days later. So that's a typical looking zone. So now what we do is I'll take a sell stop, and when I say sell stop, it's an order on the other side of this bar. So price has to trade lower than the low of this bearish big shadow for it to trigger my trade. And my profit target would be the very next zone. Now, what we see here is that this this red zone it is really, really close, right? So our sell stop is right here, and our target is only 47 pips away. Our stop loss goes on the other side of the big shadow, which is 226 pips away. So I think it's acceptable to sort of let this first profit target go because you're so close to it from entry, and instead shoot for the next profit target. And you can see in this case it did make it 182 pips down to the 1.3393 zone down here. And that bar closed right around there, and it took a couple more days before it fell through that zone and made its way back down to the next zone, which is at 1.3108. Now what I like to do with these trades is I will have one target that I shoot for, and if price makes it, if the market makes it to that first target, which is very close, and in this instance it would be this zone right here, then what I'll do is I'll take some profit, move my stop loss to break even, and then shoot for the next target, which in this case would have been down here at 1.31. So that's how I manage these. So let's look at some trades here. I'm going to pull up this. Whoa. I'm going to pull some charts here, and we're going to take some trades. So what you should see here is the Aussie yen. And these candlesticks are red and green. And I've got a few other charts here. I've got the euro, I've got the Aussie yen, I've got the euro, and I've got the euro Swiss. So those are the three charts we're going to trade. And with this, Jez is asking, would this setup mean one would have a very large stop of 100 pips? Yeah, Jez, that's right. Not always. That's not always going to be the case, but certainly sometimes that will be the case, where you'll have a stop of 100 pips or so. It really depends on the market and the time frame. Now, just because I trade the daily charts doesn't mean that everyone should. Some people may be more comfortable trading a lower time frame chart that will tighten up your stop. However, I should say that overall, in general, what I've seen with traders, most traders do better if they learn on a higher time frame, like a weekly or a daily chart, before they start trading the 5-minute chart. Most traders I know, and I'm certainly no exception, learned to trade when you're not really under the gun. So if I'm trading the daily chart, I've got hours and hours to think about things. If I'm trading the daily chart, I can literally check my chart once a day and manage my trade that way. But if I'm trading the 5-minute chart, things happen quickly. So I would certainly recommend that in most instances, if a trader wanted to trade big shadows, the best course of action would probably be to first test it, make sure that you're good at it, and then if you do get to the point where you're going to live trade, you would do it on a higher time frame chart. That's what I would do anyway, and that's what I did when I started trading naked. Boyke says, must wicks also engulf, or is body enough? Yeah, I think it's just the bar itself, so that includes the high and the low, so the wicks. Yeah. To be honest, actually, Boyke, I usually don't use candlesticks. I usually use line charts. So my charts usually look something like that. But I understand a lot of people like candlesticks, so I'm flexible. Doesn't really matter. They give you the same basic information. Jez asks, how would a newbie with no big startup capitals trade in this manner? Jez, the best thing I can say is that you might want to, first of all, a newbie, I think in most cases is going to be probably someone who's likely to do a lot of back testing and forward testing. So back testing, like I'm going to do right now in this program, or forward testing with a demo account. But if you get to the point where you're consistently profitable, what I would probably do is open up an account that offers micro lots. So I'm trading for like 10 cents a pip or something like that. That makes sense. Because if you're trading 10 cents a pip, and yeah, Adrian's spot on. Adrian Monk says use micro accounts. Yeah, that's right. There's no reason why anyone would want to start out trading standard lots or even mini lots for that matter. Really, micro lots is where it's at. So you'd be trading for cents per pip, Jez. All right, let's get rolling. So what you have here, these red lines, these are my support and resistance zones, and we're on the Euro Swiss right here. But people probably like the Euro. Oh, the Aussie. Let's do the Aussie. The Aussie yen. Was says, I didn't get this session from the beginning. How would I be able to have the papers afterwards? Was, this is recorded, and this is also I have ebooks for anyone who wants to. If you want an ebook on the big shadow trade or these other naked trades we're going to talk about, those are certainly available to you. All you have to do is just let me know. You can just send me an email at highpipdiet@gmail.com. Let's get rolling. We're gonna first trade the Aussie yen. So let's see if we can see any big shadows or any nice looking naked setups here. So we're back in 2002. Looks like it's February 20th, 2002. This is a historical refresh. Yep. Yeah, so this is 2002 Aussie yen. Let's go. Let's look for now. This is interesting because what we have here, let's zoom in on this. Jack, we will look at the euro. We are going to look at the euro, I promise you, Jack. We will look, in fact, we'll look at more than just the euro. So what we have here is this bearish big shadow. Why is it a big shadow? It's because the high of this bar is higher than the previous bar. And the low of this bar is lower than the previous bar. And it completely engulfs it. Now, the other aspects of this that are interesting is that, one, we're not on a zone, are we? We're at 68.85, and the zone is up here at 69.73. So that's about 100 pips away, and that's not what I would call a close call. So I'm not going to put my buy stop down here and take a sell trade and put my stop loss up here. I'm not going to do that. Instead, what I'm going to do is I'm going to let this one slide. And you can see we would have been triggered had we taken that trade, but I didn't want to take it. And it looks like we also probably would have come really close to being stopped out. So I suppose that's good that we didn't take that trade. Okay, here we go. Now we're talking. Now what we have here is not only is this a okay, so what we have here is a bearish big shadow. Why is it a bearish big shadow? Because the high is higher. The high on this bar is higher than the high on this bar, on the previous bar. The low is lower, so it completely engulfs the previous bar. The other nice thing about this big shadow is it comes within a few pips of our zone up here at 69.73. The other really good thing about this bearish big shadow is that it's the longest range, or the widest range bar we've seen in 1, 2, 3, 4, 5, 6, 7, 8, 10, 11, 12, 13, 14, probably at least 15 trading days. So essentially about 3 weeks or possibly more since we've seen a bar with a range that wide. So this is excellent. This is a nice setup. It's also what's known as a bearish belt. A belt is something that we see when usually it's over the weekend. It's usually the first bar of the week where we see these belt bars. So it's a bar where it opens up higher or lower than the previous bar's close. You can see here the previous bar right here closed on March 2nd, right here at 69.25. And the very next bar on March 4th, so it is over the weekend, right? It opens all the way up here at 69.53. So that's why it's a belt, because it's opened so much further away from where it last closed. But a belt is not just a jump or a gap in opening. A belt is a bar where price, not only does price jump up or jump down, but it also makes a huge long bar and closes at the other extreme. So that's what a belt is. You'll see it open at sort of a gap opening, right? And then price will travel all the way down and go the opposite way. And that's exactly what happened here. This is an incredible bearish bar. It's a great signal. I'm going to take it. So what I'm going to do is I'm going to put a sell stop just outside the low here, right there, and I'm going to put my stop loss up here on the other side of the high. It's 97 pips away, and I'm going to place it right there. So that's there. I'm going to do another one, another 3 lots, same price right here, and I'm going to put my stop loss on the other side of the high of this bearish big shadow, which also happens to be a belt. Now, what I'm also going to do is I'm going to take profit down here around where these recent lows are. You can see there's a zone right here. I've indicated it on the chart. So let me modify my order here. So I'm going to take profit just above the zone right here, 134 pips away. So there we go. So let's roll. Let's see what happens. And I'm going to want to see this trigger on the very next bar. If it doesn't trigger on the very next bar, I'm going to remove my orders. Yep, Harley, I'm using a sell stop. And the reason why, I want the market to tell me that I'm correct. If I think the market's going down, I'm not going to buy in a retrace. In other words, I'm not going to buy as the market goes higher. That's right. It's not a limit. It's a sell stop. It has triggered on the very next bar, which is something that we really like to see, or I really like to see on these bearish big shadows. So there we go. We're in. And where are we at? We're currently a couple of pips down on this trade. So it's in a slight retrace right now after one day. Okay, now we've got a few pips profit. We still don't have any real activity yet. Okay, we're done. Okay, so the first target, Jez is asking about stop orders versus limit orders. Jez, basically, if I think the market's going down, I want the market to go down before I get in the trade, and that's why I use stops. So if I'm going to sell a pair, I'm going to use a sell stop. If the market doesn't go down, then I'm not triggered. And if I'm bullish on a pair and I think the market's going to go up, I'll use a buy stop. So the market actually has to go in the expected direction. Otherwise, I don't enter the market. Yeah. So it's an entry type order. Yeah, that's right, Harley. Harley, essentially, yeah. As you know, Harley, essentially there are 2 types of orders. Well, there are 3. There's a market order where you're getting in right now whatever the price is, whatever the market price is. There's a limit order where you're getting in on a retrace against the direction you expect the market to go. And then there's the buy stop or the buy stop or sell stop, and those orders are where you are triggered when the market goes in the expected direction. So it's not a retrace. So those are the ones I prefer. So now what I'm going to do is I'm going to move my stop to break even on this trade. So currently we're 109 pips up on this trade, and I'm shooting for this target down here. Trying Trader says it's breakout trading. Essentially, that's right. Oh, that's unfortunate. The market made it down to my next zone here, and I didn't cash out. Okay, let's move let's move my take profit to just about there. so that if it does get near that zone again, I'll get cashed out. Okay, so there we are, we're done. So those two lots both made money. So you see how I manage that. I'm essentially looking for the first zone for my first target and the second zone for my next lot. So I split each trade into two sections, one for a close target and one for one that's a bit further. Sometimes the second target is much further than this one was. So that's basically a bearish big shadow trade. Let's see if we can find some more here. Trying traders asking about my favorite bar setups. My favorite bar setups are probably bearish big shadows. I really love these trying trader. And I have a friend who's been trading them, and he's been doing really well in his back testing. So he's been back testing sort of like I've been doing it. And he took this was a back testing, so it wasn't real money, right? He took a back testing account from $10,000 to trading just the euro, daily big shadows. He took it from $10,000 to $2 million, I think, or 2-point-something million in about a year and a half or something crazy like that. And now he's trading live after doing a lot of work and this sort of thing that I'm doing now, just like this, just the same sort of thing I'm doing here, which really works to gain confidence for me. I use it particularly when I'm in a down, like sort of in a equity downturn, a bit of a drawdown or something with my account. I'll do some back testing, or if I'm looking at a new system or something like that. Anytime I want to get some confidence in my trading, I'll do some back testing. We're looking at the Euro Swiss here. Maybe we should be looking at the Aussie. No. Robert has a question. He says, I've seen on Spyglass presentation where they draw support and resistance levels different colors depending on which market session it happened. So European, US, Japan, and then depending on which session you trade, you consider only the support and resistance levels created in the same session. What's your opinion about that? That's really interesting, Robert. I don't really subscribe to that. I will say this. I use support and resistance levels no matter when they were touched or created. But I have noticed that in general, what I see is that the Asian session will often go against the expected direction. So if I see a daily big shadow and I expect the market to, say, go higher based on that big shadow, I would probably expect to see the Asian market go the other way. In other words, I'd expect to see the Asian market go down before the European market and the New York market possibly went higher. That's really all I have to say about the different sessions. When the market's going your way, how do you take further advantage of that? Do you add to your position? Bar cancel. I'm a big fan of buying or adding to winning trades, and I'm not a very big fan of adding to losing trades. So I hope that answers your question. Joker had a question. Joker, I'm sorry I missed your question. Joker. If you would trade an hour chart, Joker says, if you would trade the 1 hour chart, would you only look at the 1 hour and 4 hour charts for support and resistance lines, or would you include the daily and weekly support and resistance lines also? That's a great question, Joker. Joker, this is what I would say to that. I would say that I basically, if I were trading the 1 hour chart, I would certainly look at the 4 hour support and resistance levels. I would draw those in, and then I would draw, after I did all those and I colored those red, for instance, then I would drop down to the 1 hour chart and draw in my support and resistance levels in blue or a different color so that I differentiated the two. And I would simply look at those 4 hour resistance and support levels zones as being more important. slightly more important. That's all I would do. Because those 4-hour zones are also going to show up on the daily chart. And possibly the weekly chart as well. So, yep. So that's what I would do if I were trading the 1-hour chart. But again, I would probably, no worries. I would definitely want to start trading daily charts and weekly charts before I went down to a lower time frame like the 1 hour. I would certainly like to do that to get some confidence in my trading. Okay. So let's look at the euro. I know we're going to look at the euro live. Boyke says, in your younger days, did you use indicators? Boyke, if I showed you a picture of my chart, what it used to look like, you would laugh. Oh, I laugh. Yeah, I used to use indicators. Not saying you're old. Yeah, I don't consider myself old. Although, as you get older, things takes longer for things to repair themselves. All right, we're on the euro again. Well, guess what? Price on the euro here has come up to the 88.78 level. 88.78. Yeah, you can tell this is a long time ago, 2002. Wow. 88.78. Are you kidding me? So this technically is a big shadow. Yep. It is a big shadow. This bar right here is made a higher high than the previous bar. It's right on our zone here at 88.78. It also has made a lower low. Has it? Has it made 88.08 and 88.09? Yes, it is 1 pip lower. This is technically a big shadow. The other very interesting thing about this setup is it seems to be at an extreme high. And the reason I say that is because if I look to the immediate left of this formation, I don't see very many bars in the way. This bar does sort of get in the way of the bottom of these bars, but the tops of these bars have a lot of space. I go all the way across the chart before, bam, I hit another bar in the same area. And you can see this bar did bounce off that 88.78 level as well. So we found some resistance here and some support back here, some slight resistance right there. So this is a pretty good looking zone here. Adrian, the GMT on my daily chart, yeah, basically I think my charts close at like 5 o'clock. No, my charts close at 9 a.m. Sydney time. So that's 5 o'clock New York time. That's when they close. That's when they close. Okay, so this is another sell stop, right? Let's do a sell stop here. We'll do a sell stop right here. Below the low, stop loss goes up here, above the high. I think I can actually take 6 lots here because our stop's pretty tight. And I want to take profit down here at the first zone down here. Okay, and then I'm going to take another sell stop. Same thing, right here below the low. Take profit's going to be all the way down here at the next zone, and then the stop loss goes up here above the high. And then I want to see this happen on the very next bar, so let's see what happens. It does trigger. Great. Okay, so now we're in. We have not achieved our target yet. Let's see what happens in the next bar. Uh-oh. It's going against us. So where are we at on this trade? We are slightly down, just a few pips here. That's okay. Still down. Had a nasty drawdown, but we're still in the trade. Okay, now we're out. Okay, now what I would do, so that first trade we had made some profit here. So now what we need to do is we need to go back and we need to check out, we're looking at this target down here. Now I would mention that I think that there is going to be some minor support right around here. See where these bar lows are right there? That would probably be, if we look down the forward chart, that's going to be a pretty nice looking zone. And in fact, if we look back here where these bar highs are over here, this is also, this is going to show up on the 4-hour chart. You can kind of see it here on the daily chart, but on the 4-hour chart it would be crystal clear. So that's an area that we're going to have to watch out for. I'm going to move my stop to break even now that I've made profit on the first position, and I'm going to let it ride and see if we can make it all the way down here. But I am going to this is going to be interesting to see what happens if price makes it down here, because it may pause, could even reverse, because it is a minor support resistance zone. We haven't made it anywhere. Okay, we're getting near our zone down here. Let's see what happens next bar. Okay. All right, so essentially what's happened here, you can see where price is closed, it's where these bar lows are here, and there's a couple of bar highs in the same area, and look at these two bars right here, right up where the bar high is there. I think this is a minor zone, and I'm a bit concerned, but let's just see what happens. Let's just try another one. Yeah, it seems to be pausing here. I'd be tempted to take profit here. Well, certainly would want to get out at this stage. So that's a big bullish bar. We've got 17 pips, so let's just close it out. All right. Well, there you go. So that one didn't work out as well as the first one did. Trying traders asking, are there certain levels that you will not bother trading off of? What helps you pick a good level? Trying trader, if you email me at highpipdiet@gmail.com, I can give you like examples and stuff, like an ebook or something. But basically, how long do you keep the support and resistance levels, Boyke? I think they're really like a fine wine. I think they age well. So I don't like remove them or anything like that. What I might do is slightly adjust them. So if it turns out, let's see if we can look at an example on the live charts here. Yeah, I often, sometimes I do trail stops. Maybe we'll talk about that at another session, Trying Trader. Maybe the next session we can go over that. But let's look at, for example, this is the euro. Actually, that's not a very good one. Well, let's use the euro as an example. Let's say that the 37.95 level, which is right here. I'm going to color it different. I'm going to color it green so we know which one we're talking about here. Okay. Let's try a darker green. Okay, there we go. That'll work. So what we have here is this 37.95. Now let's go back, and you can use MetaTrader as sort of as a back testing program. In this way. So I'm just going to hit the F12 key and I'm going to advance one bar at a time. Now let's say the market's made it up to 37.95. It finally gets through 37.95, comes back down and touches it right here. So that's a nice looking touch. Now the fact that it's touched it here and it came up here and found resistance and fell. And again, this is something that'll be much more apparent on the 4-hour chart, but it looks like a good zone right now. The 37.95 zone, 1.3795 on the euro looks really nice. So let's keep going. Okay, now we've made it up to 1.4070, and then we see a bearish big shadow. A bearish big shadow right there. And then it falls. Now what we have is a situation where it actually has blown through the 1.3795 zone by some pips and did not find support there. So at this stage, what I might be thinking is that really a good spot for that zone? Or might it need some adjusting? So I'll keep that in mind as the market moves. And then now look, this bar actually closed even a little bit lower. So what I might do, based on recent price action, is just fudge it a little bit. And maybe I'll move it down to 1.3755. So I've just moved it down 40 pips. You can see it's still almost, this bar still almost makes a touch there. And Was is asking if we also had a double top there. Yeah, I would say so, Was. If you look on a line chart, you can kind of see it a little bit better. Price made it up to 1.4070, came down and made it back up, and then came down again. So yeah, I'd call that a double top for sure. Now, so to answer your question, Boyke, about how long do I keep the support and resistance levels, I really do like to keep them on the chart, unless it's painfully obvious that price is not respecting it anymore. And what I'm more likely to do is what we've done right here in this example and sort of fudged it and moved it a little bit just based on the recent price action. So that's kind of a more likely scenario. But I'm glad you brought that up because that's a good point. See, now look, this bar right here, which is the November 9th bar. Yeah, I think that was a good question, Boyke. Thank you. It's made it right down to 1.3755. So that's pretty cool. So now I have good reason to say, okay, this little fudge that I've done in this zone, it's looking pretty good. All right, so let's look at where we're at right now. Let's advance it all the way to where we are. You can see here we've had price sort of caught between this zone right here and this zone down here. Comes up, back down, made it down here. Yeah, it's highpipdiet at gmail.com. What tastes fudge? What tastes fudge? Look at this. Look what we have right here. I don't remember. I don't know if you folks were around. We had this webinar the end of last year, and we were looking at the euro, and I was talking about. Actually, it was in December, and I drew. Let's see if do I have that chart? I think I might have that chart. Yeah, this is the chart. Here it is, right here. You should see it now. Okay, so this is the same chart as that we had just before, but it's an older one. It's the same chart. It's just I didn't create it right now like I did that other one. Now, what I want to point out is, see this shaded area? We were talking about this on FX Street back in November, I guess it was. Looks like end of November. What I said was, I was still bullish the euro, just like I'm bullish the Aussie dollar. Those are the two pairs that I really am only buying them right now. And what I said was, I think that one of these spots, this pair is going to find support. Gino is asking, what do I have a PhD in? Is this background helping you? Gino, I'll tell you what, that's a great question. What's funny is I'm a psychologist, right? So I have a doctorate in psychology. And when I talk to people and I explain to them I'm a Forex trader, they often say, so you're not using psychology anymore. You're not using your degree anymore. And I find that funny, and I'm sure most of you probably would too, because obviously, as we all know, there's a bit of psychology in going to work and losing money, or for that matter, making money or trying to hold on to your money when you're making it as a trader. So, yeah. So I always chuckle when I hear that, and without fail, that's the most common. Yeah. Best joke for today. Yeah. Okay, so what we were talking about at FX Street was I made a shaded area, and I said, I think that now that price has come down here past the 1.3350 area, I thought that the 29 was the next stop, and I shaded this area thinking that perhaps we'll find a big shadow down here. We didn't get that. And in fact, it made it here to this area here, and then traded higher, then finally made its way back down here. But I want to point out a couple of things. One is that where these bars sort of stopped right here and reversed and came up, that was a minor level. Why was that a minor level? Because these bars over here, you can see this bar right here closed on this zone, and these two bars right here, these daily bars, touched it. Again, on a 4-hour chart, that's going to be very apparent. In fact, maybe we should go back down to that. So here's this zone on the 4-hour chart. So that's that same zone, and that is where we see the euro finally made a quick little reversal down here, that same green line. Trying traders asking about long tails. Yeah, long tails can be important, but it's easy to really it's a little bit easier to trade the big shadows, I think. And maybe we will talk about long tail formations at another time, because I do find them helpful sometimes. So let's talk about where it did finally make its way down here. Tej, about adding to winning trades, I can send you an article on that if you email me, Tej. Okay, so basically what we have here is after price made it to the minor zone, came back up to 1.3350, and then came back down, came back up again. Finally, it came all the way down here, and look what we have here, folks. This is a textbook belt. Remember we were just looking at belts when we were testing them? That is a belt. Why is that a belt? Remember, this bar here on the 7th of January closed at 1.2908. And then the next bar on the 10th of January opened at 1.2876, right? So 2908 to 2976, that's 22 pips that it opened lower. And then the whole day the euro went up and it closed up here near the high. So that by definition is a bullish belt. It's not an engulfing bar. It's not a big shadow, right? Which is we've been looking at big shadows, I know, for most of these sessions. But what it is it's a belt. And those are really nice bullish or bearish signals, particularly when they're on a zone. I'd like to point out that they're rare on the daily chart. Much more common every Sunday or Monday, depending on where you are, when the market opens in Forex. But in Forex, we typically only see them over the weekend, which obviously is the case here too, right? Because this bar is the 10th of January, and this is the 7th. So the bearish bar is the 7th, and then we have the 10th here. Adrian, basically for the belt, what we want to do is we want to see a pair that has a gap opening. What if it had stopped lower, says Was? Well, yeah, the belts really should close up near the top. So, Was, what I would probably do is say, if the bar closes in the top 25% of the bar, then it's a bullish bar. So in this case, with this belt, it closed at 29.49, and the high was 29.63. So it was pretty close, really. It's like 14 pips away from the high. On the 18th, was that also a belt? 18th. No, I don't think so on the 18th. This one right here? No, because it opened at about the same price as the previous bar closed. So this bar closed at 1.3292. After the doji. Oh, this bar, right. I see what you're saying. No, that's not a belt. Here, let's talk about the rules. I think Was is onto something. A belt has to be in an extreme area. So if we look to the immediate left here, we don't see any bars in the way, right? there's just there's nothing going on. There isn't anything in the way. So really, that's what we want to see for these belts. And it's on a support and resistance zone. And if it's a bullish one, it closes up near the high. Let's look at another example. There was a belt on the Aussie dollar also on the daily chart. The daily chart. Boy, that's a messy one. Let's open up a new chart. Okay, so this is the Aussie dollar daily chart, and where did we have a belt? Maybe it was the Aussie yen. I thought we had a belt. Must have been the Aussie yen. Okay, so let's see. I thought we had a bearish sugar. I'm not sure. Here's one right here. This is back on January 11th. But I thought there was a really nice looking one. I thought it was on the Aussie dollar, but maybe it wasn't. The Aussie yen is actually a bit of a mess now. It's really sort of in a tight range, so it's not a really nice chart to look at. But I thought we had a. Oh, it is too. It's in June. Okay, there it is. Yeah, it is the Aussie dollar, and it's on June. Boyke asked a question about psychology. Okay. All right, we're getting close to the end of the line here, folks. I'm going to go to this daily chart on the Aussie dollar, and we'll look at that belt. We'll look at a bearish example. Okay, so it's back here in June. There it is. I didn't know it was that far away. I didn't know it was that long ago. I thought, for some reason, I thought it was. Okay, so June 2010. Here it is. There it is right there. And what you'll notice about this belt is it was brilliant because it was right. It was right where these bar lows were right here. So there it is, right there. Okay, all right, we got to finish up, folks. So if you have any questions, certainly send me an email, highpipdiet@gmail.com. You can get a free course at Trader's Choice FX on naked trading. So I'll be glad to help you out. Thank you, everyone, and we'll see you next time. I hope you have a great trading week. Bye. Thanks very much. Thank you. Bye.